Let me quickly move on to the third topic, which is, should RBI cut? Again, there are three aspects of rate decision. One comes from growth, one comes from inflation, one comes from financial stability. As we were just arguing, India's growth is more or less fine right now. There's no need or urgency to cut rates for supporting growth unless you believe in my thesis that India needs to grow at 9–10%. So a little bit of support from monetary policy is warranted. The second aspect is inflation. Big dichotomy in inflation. Headline inflation is still much above RBI's target of 4%, but we are consistently seeing core inflation numbers to come off, which shows that monetary policy is working. But I suspect that till RBI sees actual headline inflation coming closer to its 4% mark, they will wait on rate cuts. And the third factor is financial stability side, which is a luxury to delve into when growth and inflation are fine. If growth inflation was not fine, we would have seen everyone talking about growth and inflation. But because we are cyclically in a good position, this is probably the right time also to build buffers. And maybe that's one reason why RBI might delay the rate cut. In Citi's house view, we think that the first rate cut happens only in October and not before that. But RBI has already ensured that the liquidity in the system has improved compared to the last 5 months. The overnight rates have come off, the short end of the rates have come off, the so-called stealth 25 basis point of rate hike that had happened, that 25 basis point of rate hike has been rolled back in some sense. So this is the first step of monetary policy easing, which RBI has already embarked upon. The second stage will be when RBI will be changing the policy stance from withdrawal of accommodation to neutral. Our sense is that somewhere in the middle of the year, and then with a couple of policies gap, we might actually see the first rate cut coming. The reason we are often asked is that why RBI is different from other central banks. Why is it that Fed will cut and RBI will not cut? The big difference is that most of the other central banks are working on this rather vexed concept of real policy rate. You will see that most central bankers are saying that real policy rates are too high compared to what those economies are used to. In the Indian context, with our current expectation of about 4.5% average inflation for FY25, our real policy rate is around 200 basis points, which by Indian standards is just fine. It's not too high. So there is no urgency on RBI's part to cut rates based on real rates. Whereas if you look at US, in US a year real rates are probably 300 basis points now, given where their rates are. And by their standards, 300 basis point is a very high real rate. So that's why it's possible that RBI will not match the Fed one for one in their rate cutting, and Indian rate cutting cycle might be a very shallow one with about only a 50 basis point rate cut. And my personal belief is that the impact of rates on India's growth is overhyped. India's growth is much more structural in nature and does not require this small cyclical support from the central bank policies.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18. Now streaming live 24/7 on YouTube.